So today we have Susanna Markari. She is a insurance agent who's been in the industry for over 20 years. She also happens to be the wife of Ara Markari, the owner broker of Crown Mark Real Estate Group. So today we'd like to discuss a few things about the real estate industry. It's been going through a bunch of upheaval, lots of things going on, and so we thought, what a great way to educate people and inform people by having someone like you here. So thank you for joining us, Susanna.
Of course, thanks for having me.
Absolutely. Can you tell us a little bit about yourself?
Yes, well, my name is Susanna. I'm the owner and agent of the Susanna Markari Insurance Agency. My office is located here in La Cañada, California. I myself was born and raised in California, Glendale to be exact. I'm a mom of three. I got into the insurance industry when I was 17. So 20
Wow.
years plus now. It's something that I just got into and I learned to love. I love working with individuals, families. I love helping them protect what matters most, whether it's for their auto, home, business, commercial properties, life, financial services. I like to provide my customers with that peace of mind that if something did happen, that they are protected with life's uncertainties. So,
Wonderful. And insurance is a constantly evolving area, right? I mean, I used to think it's just insurance, it's just one kind of thing, but laws are always changing, right? Things are always changing, so you have to be on top of it. You need someone
yes,
like yourself who's been in this for years to understand where things have been, where things are, and where
yes.
things are going,
Yeah,
too.
constantly changing. We're constantly educating ourselves. We wear many different hats. It's not only strictly about auto. I'm a multi-line agent. So one minute I can be helping with someone with a claim that they just had on the road. Next thing you know, I'm out inspecting a property, making sure that the property is well maintained in good condition, so that the underwriters take it. And then I'm sitting down with a family who just had a baby and wants life insurance. And then at the same time, we have to comply with what the insurance carriers are requiring. So we have to constantly be up to date with all of that or continuing education.
Wonderful. So, one of the, and that's part of the reason why I wanted you here today is because you have so much experience, and I get that question all the time from property owners, clients who want to know what's going on with insurance. There's a lot going on right now, and people don't have an idea of where it's going. California may be different from other states in the sense that there's a lot of change happening. We do have our wildfires and rains and whatnot. So I think it would be very valuable for our clients and people who watch this video to really get a sense of what's going on. So I appreciate you being out here today. So one of the first things I want to ask you is that we've seen a dramatic rise in property insurance rates. Clients are coming back. I mean, even our own insurance at 30, 40, 50%. Some insurance companies are even just completely withdrawing their market share, right? They're leaving the market of California. What do you see? What has been the fuel that's led to the rise in these rates? Um, can you tell us a little bit about that? What's your experience been telling you?
Yeah, well, it's a number of things. It's not just one thing that occurred. It can be the number of claims that have happened. So if there's a lot of claims coming in, then there's going to be higher payout amounts. Which is then going to lead to insurance companies having to raise premiums to make sure that we maintain profitability. So that's one. Another thing that people don't maybe realize is economic factors. Inflation is huge, and inflation can play a huge role when it comes to insurance premiums. For example, let's just say a fender bender that might have happened 5, 6 years ago. That fender bender might have cost 3, 4 thousand. Now that fender bender is double. Cars are smarter, there's more technology, so then parts are more, and then body shops are going to charge more because labor costs go up. And the same thing goes for properties, right? Material costs go up, values of homes or commercial buildings go up, so the cost to insure is going to obviously go up as well. So that plays a role. Another thing could be catastrophic events, the wildfires. What happened in 2020? it's playing a role in what we're dealing with today.
Right.
And obviously, if you're dealing with reputable insurance companies who have more of the market share, they're going to end up being the ones who are going to have the higher payout amounts, and they're the ones who are dealing with what they're dealing with today. And another one I would say is litigation.
Damn those lawyers.
I know the increase in frequency and size of those claims are going up. Court awards going up, so all of these are gonna increase insurance costs.
It makes sense. I mean, I talk to some people and some lawyers too. In fact, I have lawyer friends, and we talk about the rates, and I say, well, insurance companies are constantly getting sued, and so it seems like, I had a client who, or a friend, I should say, who lived in a neighborhood that wasn't directly affected by a fire, but they had smoke residue essentially, invade their home, their system, and so that entire neighborhood, it seemed like everyone was, and there's law offices that were just setting up local branches just to deal with the claims that everyone was making. And these lawyers, of course, I hate to say it, I'm a lawyer too, so but they come out and they say that you're not going to pay for anything unless you win, unless we recover for you. So it's so easy for these people to do it. And then, but the consequence of all that is what we see now, which is there's no free meal.
Yeah,
We're
and
dealing with all
everyone's
the
paying a price for it now.
absolutely,
Yeah.
absolutely. It's everyone's paying the price. Um, I know it's really hard to say, but if you had a magic ball and you were looking into it, what do you see the future holding for insurance rates? Is it going to keep going up? It's like asking how are interest rates going to be. It's hard to know. But any thoughts on
I
that?
wish I had a magic ball, and I wish I had an answer. But from my experience, I look at it as, I mean, things aren't going to obviously continue this way. There's no way we can sustain like. Now, I don't know if rates will go down because the cost of milk isn't going down. The cost of anything we're doing is not going down. But there are maybe ways that insurance carriers can come up with maybe discounts, something to help lower their current premiums. Maybe homes that have newer features, newer changes to the home, they could apply maybe different types of policies that can come out. I mean, things again are always changing. It's tough right now. We're in the thick of it, but I do see that I think one more year of this possibly. So,
And maybe stabilizing.
and then it'll be
I
stabilized.
hope so too. I mean, they do talk about how interest rates are, or I'm sorry, inflation isn't as high as it used to be, but it's still going up. It's just not going up as high as it was previously. So, like you said, gallon of milk still is pretty expensive. Gas, and especially in California, is still pretty expensive. So nothing has gotten cheaper.
Yeah.
It's just not getting as expensive as fast. So I don't know. Maybe the trajectory is hopefully slowing down, maybe come down, but who
Yeah, I
knows?
mean, they kind of also have to do their clean out, I would say. People might hold it against us, or I mean, my position is tough too. I'm the middleman, I'm the consultant. I'm here to help my customer and try to do whatever I can that's going to fit their budget. And then I have to comply with what the insurance carriers need. But then I also kind of see where they're coming from, right? We have to make sure that we're charging the right premium for the risk. There's so many people that might have, put that this home is 2,000 square foot when it's really 4,000 square foot. Well, we're not charging the right premium. But
Right.
guess what? When a claim happens, we have to give the customer what they had, not what was there, right?
Right.
What so a lot of this stuff has happened. A lot of debris, clutter. I mean, they're going out inspecting properties, seeing that the properties are not in good condition. Well, these are causing more claims to occur. So I kind of look at it. I think they needed to clean up a little bit, and I know some people are not happy about it, but
That's the way it is, right?
yeah.
So that kind of leads into the
Another pointer would be having the right tenants. I would also say helps because that's also going to help lower your losses, you know.
What do you mean by that? The right tenants.
Um well, if you have, let's just say, some tenants who maybe don't carry their own renter's insurance, some of those losses can fall back on the landlord. You have some tenants that maybe could vandalize the property. Um, those type of situations can affect, or let's just say even a commercial building. You want to make sure that you have the proper clients in there, and you're writing the correct risk. You have the right. I don't know.
Yeah. I mean, I think that's exactly you're right because I had a client last year who ended up buying a building, but they were like custom furniture manufacturers. And they tried to lease space in different properties, but many properties wouldn't allow them in those buildings because of the insurance requirement. Because I guess it was a higher risk of fire because of the work they did. So I guess that's one thing commercial owners can do is limit, like you said, the type of tenants they have, so that they can manage their insurance costs.
Yeah.
Because if they accept everyone, then now they got to carry higher premium insurance and whatnot.
Yeah,
So
it's got to make sense for the landlord, of course. And they different businesses are different rate classes. So I mean, it's definitely your tenant is going to obviously play a role in your insurance premium. If you're, like you said, renting your space out to a manufacturing company versus office space, it's definitely going to play a different role in how your rate is going to go.
the risks are higher
The
or
risks are
lower
higher, or
depending on your
even a
tenants.
restaurant owner,
Right.
right?
That
They're
risk is probably
cooking.
there's probably higher risk, right? The cooking oil and
There's cooking, chances of a fire happening, more people, more foot traffic coming in and out. Chances of liability claims are higher versus an office space, for example.
that makes sense. So there's things that commercial property owners can do proactively. And some of the things I tell my clients are, review your policies every year. Make sure you're getting quotes every year. In terms of pricing and whatnot, right? Those are the things they could do.
Well, I
Or what are your
mean,
thoughts on that? I'm
yeah,
curious.
I would say if you have the proper agent, you don't need to do that. That's what I'm here for. That's what I do for my customers, for my clients. We're here to help you make sure that your coverage is up to date. We have to make sure that, your building is insured up to value of what it needs to be insured for today. Same with loss of rents. If you have loss of rents coverage on your commercial policy or your business owner's policy, let's just say if something happened, we want to make sure that if you're not renting out your space, that you are getting the right income, whether it's for 12 months, 18 months, 24 months, depending on what option you've picked. So updating that, I honestly, I give my customers a call every year, 2 months before renewal. We kind of go through if any changes have occurred because sometimes they forget
Right.
themselves. So it just helps for me to be that person to give them a call and say, okay, have your tenants changed? Have your rent amount changed? This is what the building value should be this year. Are you comfortable with this deductible? So we kind of go through it together and figure out what fits best.
And that's the value of a good, like anything else, right? You don't want to go for the cheapest,
Yes.
whether it's insurance policies or it's a contractor you're hiring. You want to go for someone like yourself who's got years of experience, who's proactive, because the cheapest isn't always the best. And we'll kind of get into that a little later. But quick question, back to the commercial property owners: what kind of insurance do you think they should be requiring of their tenants? Are there certain types that you recommend or that are normal in that business, in the
Yeah,
industry?
I mean, if you're a renter, like if it's an apartment building, it would be nice to have a renter's policy in place because your own personal belongings are covered. That's not the landlord's responsibility to cover your belongings in your unit. And then the right renter's package is gonna have liability on there. So it would be nice to have that so that if their guest had a slip and fall, The landlord's not going to get sucked into it. And then same for business owners or office tenants. They should all have their business owners policy. And same thing, it's going to cover their business property, and liability is going to be included. And then if they have employees, then you should be carrying workers' compensation for that.
Makes sense. And if they have cars, auto insurance as well. If it's like a business that does deliveries, for example, right? Yeah, it really makes a difference. And, you know, this kind of goes to the whole there's landlords out there who are, as they say, penny wise, pound foolish. For example, they will go on Google and download a lease agreement and then try to just kind of throw something together, have the tenant sign, not realizing that saving maybe $1,000 to $2,000 in terms of lawyers' fees is going to cost them tens of thousands, if not more, down the line. Um, Same thing with insurance, right? You want to make sure you consult with your agent, someone like yourself who has experience and goes, can talk to you and say, hey, I have a tenant coming in. What do you think I should require from them? Is it good coverage? What's the minimum? Should I have 1 million, 2 million coverage? Those things are important.
Right, it is. It is. And I mean, the general limit is 1 million per occurrence. So, I
Okay.
mean, then that's what most landlords do require.
Just 1 million, right. And that's sufficient for most businesses, I would imagine,
Yes.
right?
Yeah.
Okay.
Yeah. Unless you want more, depending on then the situation. Some people even carry an umbrella policy so that if
Okay.
they did get sued for more than their underlying policy, they have an umbrella policy as a backup so that
Do
they.
you recommend umbrella policies in general?
I do. I
Okay.
do. We just mentioned it. Lawsuits are not getting cheaper.
Right.
So they're capping, like they're going all the way up to the policy limits. So imagine it went past that, and now here you are paying out of pocket for something that could have been protected by an umbrella policy. And
Right.
honestly, umbrella policies are not that expensive. You can
Right.
get $1 million coverage for just I don't know, $20, $30 a month, let's just say.
Okay. Okay. Of course, it depends on the particulars and everything, right? But yeah, I mean, people don't realize also if they're not lawyers, I mean, lawyers will seek out the insurance policy and figure out how much you have in terms of capacity or liability amounts and go for that amount. So lawyers are always on the hunt.
Yeah, and you got to protect your assets. So,
Absolutely. Absolutely. Because one bad lawsuit or if you're undercovered, that could jeopardize your entire investment, your retirement, right? Are there commercial asset classes that are more expensive or more difficult to insure?
yes, yes,
Let us know. What are those?
um, like we said, manufacturing is a big one.
Right.
Vacant, unused properties is another tough one.
Doesn't matter what kind, as long as it's vacant.
Vacant, because
Okay.
then the chance of that property being vandalized is going to be a
Right.
lot higher than anything else. And then, the same way we look at wildfire high risk areas, same thing happens with commercial properties as well. And then if the customer has poor loss history, that's another thing that affects their insurance rate or even the insurance carrier. Sometimes they have to add a surcharge on the policy for poor loss history.
Meaning they've made claims or multiple claims in the past.
Right. I mean, things happen, right?
Right.
And that's what the insurance is there for. But sometimes, like, it's stuff that the landlord can possibly avoid. There are things that they can do to help minimize their losses.
Right. Like for apartment buildings, I tell my clients that you talked about renters insurance, right? That's the type of insurance that protects the renter's property in case of a damage. But there's also tenant liability insurance, right? Now, is that different kind of insurance? Does it come bundled together?
It comes bundled. If you get
Okay.
the right, you can get a standalone liability,
Okay.
but there's kind of no need.
It does make
If
sense. Might
it's
have
just
both.
better to have a bundle, a
Okay.
renter's package, because at that point you get to protect your items,
Right.
or your business. If you're, for example, an office space, you get to go ahead and cover your computers, your desks, the furniture. And then there's also, again, loss of income in that package with the liability.
Right.
So it's better off to just take the full package versus a standalone liability.
Absolutely. Because again, renter's insurance covers just the renter's property, right? So, but if there's damage to let's say a tenant leaves a faucet on, causes damage, water damage, or some sort of or has a someone come into the unit and somehow destroy something that's not the tenant's. Maybe it's the built-in washer and dryer or the walls or something. You need the tenant liability insurance, right, for the insurance to cover the landlord's expenses.
Yeah, so the landlord will have his commercial
Right,
policy, and then the unit owner will have theirs.
right,
And then depending on how the loss occurred, what occurred, maybe sometimes both policies have to play a role in this, and both policies are kind of going to be on the line depending on what needs to be paid out. The adjusters, go ahead and take a look at what exactly happened, and sometimes they have to use both policies.
and the more insurance policies, the better, right? Because if that liability could be shifted to, for example, the tenant versus the landlord's insurance, I would imagine that's better for the landlord in the long term, right? That's one less claim potentially.
Yeah, or it won't get paid out, and
All
then
right,
now you have an upset tenant who thinks you should be paying for it when
right,
it should be their responsibility. And then, I don't know, sometimes the landlord may pay out of pocket to keep the tenant happy, or
right,
they completely just don't pay, and now you have an upset tenant.
right. Whereas if you have that insurance in place or the right insurance in place, you avoid the dispute, you let the insurance companies and the adjusters
Exactly.
figure it out.
Yep.
So that way, landlord and tenant can both remain on better terms, or good terms, I
Exactly.
should say. Um, I have many small commercial property owners who, for the sake of saving money, will not get earthquake insurance. And I have a few who are contractors, in fact, and their thing is, yeah, if you got a building made out of sticks and it's not too high, they flex. It's fine during an earthquake, um, because it costs a lot. I know some of these policies can run into the several thousands a year just for the earthquake policy, which is separate and apart from their regular policy. Do you see that a lot? What are your thoughts on that?
I'm an insurance agent, so I
Right,
am going to tell you that having earthquake insurance is the right way to go. Is it required? No. Is the bank going to ask for it? No. So it's something that it's a risk that you're going to have to take on.
right,
I know we haven't had an earthquake in a very long time, but we don't know when it might hit us, and you might want to ask yourself, what situation do I want to be in, right? If an earthquake happens, your standalone policy isn't gonna pick up the earthquake damage. I think sometimes people think, oh, they'll do something. No, earthquake is its own policy.
because they
There
make you specifically exclude, right? They have an exclusion document they usually have you sign, wherein they say it does not include
Well, you
earth.
reject it. You have
Right,
the option to accept coverage or reject coverage.
right.
So if you reject that earthquake policy, then at the time of a loss, that's going to be something that you're going to have to take on.
Gambling essentially.
Yeah.
Yeah, it's a tough call, I mean, especially in California, everyone is dealing with higher prices for everything, and so sometimes they look at that policy and they figure, well, maybe I can go with another few years without having it. But like you said, it's a big risk, right? If you
Hmm.
have that policy in place, you are going to sleep easier at night knowing you have a policy in place. Um, so I don't know if I've told you this, but in law school, I remember there were a few cases that we read about which blew my mind. These were cases where people went to the insurance agent, purchased a policy wherein they thought they had purchased a policy. They would give their premium, pay their premiums every single month. There was a classic one where they tried to insure a bridge, and the city or whoever it was paying every month into the policy. One day when there was an incident in that bridge, and they found out there was no insurance because the insurance agent was essentially just pocketing that every month. So
Not
that's the other
good.
reason why I wanted you here today, because people will try to always find the cheapest insurance agent policy, just like the cheapest painter or cheapest lawyer, but you can't do that, right? I mean, it's a fiduciary duty that you have to protect your clients, and not everyone takes it as seriously as you or people like you.
I mean, I look at it as, I mean, again, you're looking at something where if at a time of a loss, who do you want to protect you? Which policy do you want to cover to protect you? Finding the right agent is very important. Some people may see the value in it. Some people don't until they experience a claim. But at that point, it's too late. So I would say, do your research. make sure that the agent is up to date on their license, right? They have an
Right.
active, well standing license. Take a look at their experience. Another big one is referrals. Referrals are always the
Right.
best. If you have a family member or a friend that you trust and you value their opinion, they may have an insurance advisor in their family that they can refer to you. And another big one for me is being transparent. I'm very open and honest to my with my customers. It's going through the policies, going through the package, letting them know this is what's included, this is what's not. For an additional premium, we can add this. So you got to customize the package for the customer. It's not a one size fits all. This commercial building is going to be a different rate class or a
Right.
different rate compared to this one. So it's very hard to compare. But I would say is, you have to find someone that you trust, and it's your instinct. Who do you feel comfortable with?
Right. And I've got all these different stories, and it's interesting. You encounter these different things throughout your career that really help you make better decisions later on. So
Mhm.
another example I have is years ago, I had a client who was looking for a policy. He had a policy in place for his apartment building, and he wanted to find a cheaper policy. Well, he shopped around and had some insurance agents send him over a lower quote. The insurance agent, the new one, didn't tell him why it was cheaper, so the owner just assumed lower rates, same policy coverage. Well, what that insurance agent hadn't said, the new one, was that he had excluded certain things from that policy in order to make it cheaper. And so when he had an incident where there was torrential rains in Southern California, which doesn't happen very often, but when it does, it's like a week of like these heavy rains. Some
Mhm.
of these buildings aren't built to deal with that kind of rain. And so he had all this water backup from the drains onto into his units. And several of the units had thousands in damage on the walls. The flooring had to be all replaced.
Oh my
Mold had
gosh.
developed over it. So, and then when he called in to get, yeah, total disaster, right? And he was thinking in the midst of all this, yeah, you know what? I'll have insurance take care of this. Well, to his much to his disappointment and surprise, when he called to make a claim, he found out that was excluded from his policy. And when he called that new agent that he'd gone to that was cheaper,
Mhm.
they found out that he had just excluded that coverage in order to basically sell him a policy.
Yeah.
So that's the other danger of all of this is that you've got to really know, like you said, you take the time to explain to people what's included, what isn't, right? If you've got someone coming from another insurance agency, you probably want them to send over a declaration page or something to really have a sense of what you're getting and not
Yeah.
getting. That's very important,
It is
right?
important. I mean, how I look at it is, I'm not here just to sell a policy. I'm not comfortable with doing that myself. It's not about that. It's about the customer. I would hate for it to get that phone call and be
Right.
like, this is what happened and you excluded it. I'm not that person. I would disclose it with the customer and let them know, if you want, you can opt out of this, and this is what your premium is going to be.
Right.
So again, it's just being open and honest. And I hate to say it in these terms, but you get what you pay for.
Absolutely. Right.
Unfortunately, that's what it comes down to.
It is. It's sad, but it's true. Um, we talked about California and the way it is. Is California, do you know, are they planning on fixing any of this in terms of the government, local, state level or whatnot? Do you know if is there any hope, or are we just gonna, cross our fingers and hopefully things will stabilize?
I think with a lot of the preferred insurance carriers, things are will stabilize.
Okay.
They're not gonna let it continue. It will stabilize, and that's why they're doing what they need to do, as far as like inspecting properties, getting our customers to go ahead and clean up their properties. They're giving people the chance to do certain things. Now,
Right.
if you don't comply, then you're gonna go to another company, who is gonna probably take it on, but add on a surcharge or put some exclusions. Another situation that happened, I did have a customer who had an old roof and he refuses to replace the roof. He's a commercial property owner. So a lot of the preferred companies don't want to take it on. So if they don't want to take it on, you have to go find another carrier that's going to take it on. But what happened is they put on the policy, instead of having the roof be at replacement cost coverage, it's going to be at actual cash value coverage. And a lot of customers don't know the difference.
Elaborate, please.
A replacement cost policy is going to give you what it costs to actually replace, whether it's the property, whatever it may be. Whereas an actual cash value policy is going to take the replacement cost minus the depreciation, and then that's what you're going to get. So a lot of the times they'll do that. And that's another thing that some insurance advisors may not disclose. It's going to help lower the rate, of course. But that's another important thing is, making sure you have a replacement cost policy. You got to make sure.
You heard that here, folks. Absolutely. So property owners, especially commercial property owners, make sure you have a great agent on your behalf working for you. Don't shop for the cheapest one. Make sure you're proactive, right? Taking care of issues. If you got an old roof, old electrical, you want to make sure you're updating those things to help you be in a better position to get a better insurance policy. Review those policies, understand what you're getting, and more importantly, what you're not getting.
Yeah.
Right? Am I missing anything?
No.
I think that's it.
I think if you have the right person,
it all comes down to the right person,
yeah,
right? Trusted advisor
yeah,
who's going to be there for
your
you.
agent is your advocate, right? Your agent is going to be the one that's going to help navigate through this and make sure they find you what you need and what matters most to you.
Wonderful. Susanna, thank you very much for coming out today. I appreciate it. You have given us a lot to think about.
Okay.
A lot of great information for everyone.
Hope I didn't scare you.
No, not at all. You did a great job. I mean, the experience is obvious, and that's what's important. That's what people need to understand, the value of that experience. Just like anything else, whether you're working with a commercial broker, a property manager, insurance agent, a lawyer, the experience of working with someone who's been in it long enough, who's seen enough to give you that advice, because that's what you're paying for, right? I mean, the policy, sure, you can get it. You can go online. I'm sure enter some information. It'll, give you a policy if you'd like, but it's what you pay for. It's what you get, that additional value, which you can't avoid. You need that. You need that value. So
Yes.
thank you very much for coming out today.
Of course.
Looking
Thanks
forward
for
to having
me.
another one of these down the line.
Yeah.
Maybe when insurance rates are lower
When things
again.
change.
When
Yes.
things change.
Yeah.
Good or bad. All right. Thank you.
Thank you.